Hey,
Hey, hello everybody. Chris Martinson here, back with Paul Kiker of Kiker Wealth Management. Paul, good to be
good
back
morning,
here with you
Chris.
today.
It's nice
Got
to
a
be here.
lot to talk about today. Oh my gosh, so much happening. I thought maybe we should do these once a quarter, but it looks like with markets the way they are, once a week, and it's August. This is supposed to be my sleepy month.
I know it's supposed to be boring. Everybody on vacation, back to school, and you've got all kinds of little undercurrents starting to get some substantial riptides under the market right now.
Yeah. Well, China's a big deal. I've been writing a lot about that. Well, you're down in Georgia, where I just wrote this morning about what I consider to be some very provocative indictments that were handed out in the court system there around election interfering, and some of them seemed pretty dodgy based on what I was reading. I was reading about um, the lawyer out of Alpharetta who was charged with 8 separate things. A bunch of them are felonies because he showed videos to state legislators showing some dodgy stuff at the mail at the drop offs and with the ballots and things like. He showed videos. That was it.
Mhm.
He's being charged with all kinds of crimes around that. It feels provocative to me. Like that's not reasonable, usual, customary, ordinary.
Mhm.
So that's adding, I think, to this social tension, the fraying, is happening here.
It sure is. And what's interesting is my wife being a teacher, health and PE, she came home last night and we sat down to eat dinner. And the first thing she asked me about was the indictment. She said, that's all anybody and she's in the elementary school system. So she said, that's all everybody was talking about yesterday is, what in the world is going on? Shocked that what appears to be a substantial level of corruption coming
Mm-hmm.
out of Georgia right now. So it's a big topic around here.
Yeah, well, what's interesting is that the Georgia court system on June 14th actually had an affidavit filed by somebody that they had hired to look into the security of the Dominion Image Cast X machines, which are, as who was it? Stalin famously said, "I care not who casts the votes, I care who counts the votes." Right? These are the counting machines, and they are so hopelessly compromised that you could not possibly build one on purpose that would be more compromised or compromisable than these things. Right? I mean, everything. They can be hacked internally, externally, remotely. They you can gain access to them at what's called root level administrative, which means you can change stuff. Nobody could ever figure it out. I mean, it's just what, we have
Yeah.
better security at the ATM at the 7-Eleven, right? They don't lose that $2 withdrawal for the slushy. That we can keep track of.
It's true. That is true. And in the most frustrating thing is we have the technology today with blockchain. Heck, TSA does a great job of making sure that you're the person that's supposed to be flying. Just put them in charge of making sure that you're registered to vote and see what
Yep.
happens. But we've got the technology today, and what surprised me is with the blockchain. Why don't we have some type of accountability? You would think that our leaders want to come in and make sure that we're doing everything that we can to prove to the public that these elections are valid. I mean, it reduces local stress. And then, of course, I heard a news release. Apparently they had posted some charges a couple of days before that came out, took them down, and now they're claiming it was a trial run. I haven't got a chance to read into everything that's going on, but there's a lot of smoke going around here. It just doesn't make a lot of sense.
Yeah, I don't know how you can charge people with the crime of questioning an election when you have machines that are now in a court of law affidavit by a
Right.
security expert proven to be hopelessly insecure. Of course, those are legitimate, ordinary questions, but I think that's the point. And now the scuttlebutt is, I was just talking with some very well-heeled people just before we jumped on here. These people are operating several pay grades above mine, many pay grades above mine, and the open talk is now, we're concerned: is there even going to be an election in 2024? Because these are the sorts of things you do when you're Ceausescu from Romania or you're some tin pot dictator, right? You jail your opposition and then you manufacture some reason why you can't hold the elections right now. It's some sort of an emergency or whatever,
Yes.
right? But that's going to introduce what we would call volatility into the situation. We've got China. Smoke is coming out under the side of the chassis of that particular vehicle. I want to talk about that today. So I'm actually glad that whoever's been there making sure our markets seem calm have been doing their job. But what I watch for in moments like this, because like you, I got a few gray hairs on the head, which means I've been down this road before. I've watched Wolf of Wall Street. I kind of understand the name of the game. The name of the game is to keep it looking okay while the big boys and girls sneak out the back door. So
That's right.
I'm always watching for, because they can't do it without leaving tracks, right? You can't just move $1 trillion out of the markets. And so
Mhm.
the question is, where do they leave their tracks? And it's funny. They're like, I watched NVIDIA just get upgraded, some, sell shops like, oh, this is going to 580, or, usually
Right.
582. They have some nice precision around that, right? And it's already got a forward PE of 280, right? Yeah, good luck with it. So
Absolutely.
they're trying to herd everybody over there into like the latest FOMO meme stock, but where are they sneaking out the back door? I think, oddly enough, somebody is sneaking out of treasuries, and I think it's connected to China. I want to talk about that.
Right. That sounds great.
All right, let's start there. And so I'm going to start with the usual thing here, which is that the right one? I think that's the right one. I'm going to share this now. And just let me know if this is not showing up proper for you. But you see that?
Yes. Next time.
Good. All right.
There we go.
As always, everybody, this is video is being produced for informational purposes, not considered financial advice. Always consult with a financial advisor or attorney or tax advisor before making any specific decisions. And Peak Financial Investing is a promoter for Kuiker Wealth Management because we believe in who they are and what they do. And so we are compensated if and only if somebody opens up an account with them and decides to work with them. So as always, investing involves risks. Past performance is not indicative of future results. And that's what we need to say now. So let's start here. So China's treasury holdings are dropping steadily, right? And of course, this chart looks maybe worse than it is because it doesn't start at zero. It starts at 700 billion on the y-axis there. So, but look at this, Paul. First thing, if we chase back where China's treasury holdings are today, they're where they were in 2009. It's hard for me to overstate just how different the world is from 2009 around China. China was a fraction of its former self. It's been growing its economy over that whole time frame. We're talking about it close to 7% a year. So that means that it's basically doubling every 10 years. So this is pretty much their economy is now more than twice as large as it was back then. They're a real powerhouse, and they have been wandering away from U.S. treasuries. And so I think we understand that in the context of the BRICS.
Yes.
In the context of not wanting to be exposed to the United States, who's made it clear that if necessary, we, the United States, will freeze your sovereign holdings because we're unhappy with you, as we did with Russia, proving that those holdings are, not sovereign. So I think China's walking away for all kinds of reasons, and this is having a pretty big impact. And I think part of that impact we can see here on the 10-year note. This is the price. So this is a price chart. So for anybody looking at this, when the price is going up, that there's green candles on this, the yield is going down because price and yield and bonds work in opposition. But please note what's happened here ever since about the third quarter of 2020 to the price. It's been dropping, which means yields have been going up. And now United States 10-year yields, Paul, are back where they were in 2008. And they look dangerously close in chart terms of breaking that little blue dotted line. If they go below that, we're going to be seeing 5%, 6%, wherever they end up at yields on these 10-year notes. I think it's connected to this. When we line them to those two charts up, and here I had to sort of stretch them to get them to line up, but the years line up. So it's kind of a so-so correlation. It's not exact. You can see that, U.S. 10-year note price went up strong 2019, 2020, even as China was selling off their holdings modestly during that period. But that was because, well, certain central bank was busy buying gobs of these things, massive quantities. Yes. We spent what happened? The Federal Reserve balance sheet went from 4 to 8.5 trillion, 8.8. Anyway, so
a ridiculous number. And you take into consideration how much our money supply has increased over that period of time, and the just massive amount of deficits that our government's running, and the financing that they're having to undertake. And China's been steadily moving away. Even in that late 2019 surge in rates, when it looked like we were headed into a recession. Of course, all the money in 2020 kind of bailed us out there. they've consistently moved and then accelerated. And you know, the big question is what's going to cause them to come back and reinvest their savings into U.S. Treasuries at this point? I mean, like you said, we sidestep the rule of law and due process, so they have to be concerned about that. And so that's, I think that has a major impact on our tax rates going forward. We've got the Trump tax cuts that sunset in 2025. We've got this massive amount of refinancing that the government's going to have to do over the next 6 months. I think the numbers are what, like 1.8 trillion, something like that, which could very well overwhelm the markets. So, or the participants that are going to be normally buying those. So that's a huge risk. That's another sign that we're seeing some unraveling of what has been the status quo for the past 10 to 15 years, especially since the crisis in 08 that's provided the fuel for these markets to be overpriced.
Yeah, so prediction time here. It's clear that when you say the government's going to have to finance another 1.8 trillion dollars of stuff, right? Some of that might be rollover, some of that's brand new spending. I think a lot of it's brand new. That brand new, of course, creates more pressure, right? Somebody's got to buy that product, right? So when the government sells a treasury, what's it selling? It's selling not even a piece of paper anymore. It's a computer entry that says there's a QSIP number, which is an identifying, string of letters and numbers that says you own this debt obligation of the U.S. government. So they're going to have a lot of that's new. So that's out there competing for money. Money supply is actually dropping right now on a year-over-year basis. So there's less money out there. We're seeing bank credit actually contracting, at least at the commercial level. So we're seeing this drying liquidity at this point. So China withdrawing from being that liquidity engine of the world is a big deal to me.
Yes. It's basic supply and demand. And, we've been able to be fiscally irresponsible because we've had countries like China that have been willing to loan us those dollars to spend without any recourse. And, the question is how much longer can we do that? And how painful is the reversion? How painful is it going to be when the government cannot continue to spend that way? Or, they choose currency collapse on the other side, which is going to be painful to those that aren't prepared and even the ones that are in the centers of power.
Now, what's interesting to me is what are they doing then? If they're not buying treasuries, so China runs every single month a massive positive trade surplus with the United States. So they're getting lots of dollars because those are settled in dollars. So now China's, you're a manufacturer. I just sold a bunch of lithium batteries to, drone enthusiasts or whatever. And I've got, $1 million US bucks. What do I do? Well, I need them in my local currency. So I flip those in my banking structure. Those pass up to the central bank at some point. Mm-hmm. And they're sitting on a big old pile of dollars because they're converting them back. What are they doing with them? Right. Not buying treasuries. So I'm not clear what they're doing with them.
They're not buying treasuries, but I mean, you just hear some of the headlines and what's taking place, how they're reinvesting into Africa, they're reinvesting into the Silk Road and international relationships. And then, I don't have the data in front of me right now because it's not something that I've looked at the past 3 or 4 months as far as, I'm watching it, but I can't tell you the numbers. A lot of gold is leaving the United States and going to Russia and to China and to the BRICS. And it's my belief that once that money leaves our country, leaves our borders, that it's probably not coming back. So, what reason they reinvest back into? Of course, they've been building up their oil reserves and oil relationships. So they've been reinvesting those back into long-term projects and long-term relationships more so than continuing to support fiscal irresponsibility.
Yeah. Well, the numbers I don't have would be sort of what we'd call direct foreign investment. Maybe China's buying farmland here. I don't know, but those dollars have to be going somewhere.
Yeah. And I've heard that, but I don't have the numbers on that at all.
Yeah, I've just heard rumblings. I don't know how much to trust anymore. My trust is a little low.
That is true. Like I was telling you, there were a couple of things that I started doing some research on yesterday and this morning before our talk. And when I dug into the headlines, I said, well, that's a little inflated there. That's not exactly something I want to talk about today.
Yeah. No, it's a problem because it's always been a problem ever since Randolph Hearst was, trying to get us into a war with Cuba or whatever. But, that's the nature of the beast. I'm just more aware of it now, Paul, that it's really, it takes a bit to sift through the BS and find what you think is still true. So there's been a lot of articles coming out about how China's sort of on the ropes. You got the Zhongrong company, failing to make payments on dozens of products. That was in Bloomberg yesterday. You've got Country Gardens, whose bonds are yielding an eye-watering 2,500%.
Yes.
That's next year's bonds. Like, anyway,
Well, the interesting
it,
part is, sorry, Chris, I didn't mean to interrupt
but
you there.
no, I mean the summary of that is I learned from COVID when they showed us pictures of people falling over in the roads, which turned out not to be true, that
Right,
China releases this sort of information when it suits them. I'm not sure. So I'm suspicious. Anything that
right,
comes out of China now, I'm kind of like, why do they want me to know this right now? Because I don't think there's anything really coming out of there that isn't approved somehow on
right.
some level.
Well, you'd think it's controlled, and they're very narrative driven. And what's interesting is what at the beginning of the year here recently they stopped reporting unemployment for under the age of 25, I think it is. But I think it's Cameron Murray that made the comment years ago. He says, "Why am I hearing this now?" And that's a question I ask myself a lot:
Right.
is why am I hearing this now? So, um, but from a big picture standpoint, I think we've talked the past couple of times. I've mentioned that I feel like we're in the danger zone. And when I
Mm-hmm.
talk to a lot of people that are in our industry, and especially other advisors I know, I like to talk to a lot of individuals that I respect that are on the buy and hold side, kind of that corporate side, just to put out, because they're a lot of times drinking the corporate Kool-Aid. And so I say we're in the danger zone. They're like, "What do you mean we're in the danger zone? We're no longer in a bear market. Never have we seen this type of rally historically, and that's true. But we've also never seen rates move this fast, this much stimulus put into the economy in 2020, this much fiscal irresponsibility outside of a recession. So you would think that it's going to distort things a lot. And I don't know, but I do believe that we're in that danger zone. I mean, we've got some data that looks good. We've got some economic surprises, but we're still slowing economically in a lot of the numbers. We're starting to see defaults tick up, not in a massive number, but it's like today, or yesterday, Unusual Wells tweeted that new credit card and auto loan delinquencies have now surpassed the pre-COVID levels. So, we were already starting to roll over in 2019. The Fed had to intervene, cut interest rates. Of course, we didn't
Mm-hmm.
have the inflation. Then we run into COVID. So, this is not, and especially when you've got China, whether it's an agenda or they're just controlling the reality of their situation, that economy is not recovering like we expected it to. Emerging markets aren't recovering as much as we expected it to. You've still got inflationary pressures across the board, and housing, house owners are frozen. So at the margin, we're seeing a lot of stress. So I still believe we're in the danger zone here between now and November, and that, Goldilocks economy belief that is out there right now, and the amount of leverage that people are taking, speculating on a new roaring 20s type situation could be challenged over the next several months.
Yeah, so let me look at this. Let me see where we're at. As I'm looking at a set of futures here. It's very hard to get a good signal out of what's happening here right now. It's just a
It
mess.
is. It really
I
is.
can't really figure out what's going on. So I was just, let me see if I got, so oil just came in low today in terms of there was like a 5.9 million crude draw, which is usually a pretty big deal that normally moves markets.
Mm.
It actually went the wrong way. So when we start to see these wrong way moves, it's kind of a weird thing. You get that volatility at the tops. But I'll tell you what caught my eye. I wrote about it a couple days ago. So I want to return to this volatility theme. So China announced a surprise rate cut, right? Now, I'm old enough to remember all through 2009, 10, 11, 12, 13, 14, et cetera. Anytime any central bank eased liquidity, it was a big positive event. And on that day, we saw both stocks and bonds tank, which was a weird signal, right? And then some rescue ops came in, and I'm convinced they're rescue ops because you watch everything turn on a dime and no good
Right.
reason. Volume doesn't change. It's just the computers get pivoted somehow. But my advice to people is to don't pay attention to that. Watch what's happening underneath, because that was the first time, Paul, since 2010 when China has eased, that the whole world's financial markets, which are one big linked, speculative arena now,
Yes.
didn't cheer. They did not only did they not cheer, they went the wrong way for a period of time and settled out flat on the day, which was a big surprise to me.
Right. And that is surprising because that's one thing that the markets have consistently done. So that tells you that there's big money out there that was surprised and says, hey, this is not as good as what it has been in the past. And I mean, what are we going to do right now with inflation running the way it is if central banks slam everything back to zero again? Either we're going to have a massive recession, or they're choosing to let inflation get out of hand and stop fighting that battle. So,
Yeah.
And I think we talked about the Japanese yen. There's that carry trade that takes place, and you mentioned this morning that I missed it, but you talked about the Japanese yen jumping this morning, and or yields jumping over there. So Muhammad
Yeah,
El Arian,
10 years. It was the JGB
the
10
10 year,
years.
the
They
10 year.
jumped.
Yeah,
Yeah.
they jumped. So Muhammad El Arian was tweeted out yesterday talking about we're in that area where typically there's been yield curve control come in. Are they going to let their inflation get out of hand? Are they going to intervene? Or are they just going to go ahead and rip the Band-Aid off right now? And that's a lot of unknown. That's a big unknown that investors have to deal with right now. And that should bring volatility into a market. But in the US, there's just a detachment from reality right now. The market has been through so many concerning events that have not brought about pain. I think people are just tired of paying attention to it. And that's when the danger is the highest, in my belief.
Yeah. Well, before we get to the carry trade, thinking about this inflation and how punishing it is, I don't know if you've seen, but it's something of a trend, at least on my Twitter feed now, particularly people from Canada, particularly people in their 20s and 30s, just going on TikTok, pointing their face at the camera and then just crying, like just how impossible it is to just survive right now. These are people earning 40, 50,000, they're self-proclaiming. And then like when they add up their budgets, like you can't make it, right?
No.
You just can't. That inflation is super punishing, right? And to have Jay Powell, the chairman of the Federal Reserve, and all these disconnected Washington elites try and pretend like it's just, it's either that not that bad, or, if it is, it wasn't their fault, this whole narcissist prayer thing, right? That they run through, like, but these people are struggling, right? I feel terrible. I mean, it's really heartbreaking to watch these people just doing everything. I mean, they're working hard. They got jobs. They just, and the system is just crushing them. And the system doesn't care.
No. The system doesn't care. I mean, I had a conversation yesterday with an individual in industry that's really cracking down on employment. Basically, hey, you're not going to have, they're laying individuals off. You're not going to have any bonuses, and you've got leaders of the company that shouldn't be going to the locations. I'm trying to be as vague as I can to put pressure on. And essentially what they're trying to do is the inflationary pressures that they're feeling and the lack of good health, they don't even care at this point. They're trying to drive everybody into the ground because they're trying to protect their profitability for the next quarterly earnings report. And this is not inside information. This is just what's going on across all the employees that are there. And, so we're starting to see that come down from a corporate level, which is further taking money away, bonuses that individuals were getting. And they're feeling the pressure already. They were saying, look, we're already making decisions in our grocery bill. And these people have good incomes and they have a low debt ratio. So they've been prudent in their decision making, but they're altering their behavior. And I think we're going to just continue to see that go forward. I mean, housing prices have started to turn and head back up again. But the reality is, if you got a $500,000 mortgage at 3.5%, you don't want to let that go. And I think the rentals have continued to be strong enough that momentum is starting to slow. But as this cycle goes along, I think I'd heard the number, there was like 10 million second homes right now that are out there, that are empty the majority of the time, and we're at a deficit of 3 million homes. That could change relatively quickly, and it happens at the margins. So most people are frozen right now. They don't want to give up that 3%, and they don't want to sell that second home right now. But they're starting to think about it because these inflationary pressures are starting to wear on. Insurance is going up, taxes are going up, and wait till they have to replace a roof, wait till they have to paint, wait till they have to, have some events that are in there. So this is a slow moving event, but it doesn't mean that the pain's not coming.
Yeah. Yeah, no, it's absolutely true. So housing is a little bit trickier for me to analyze because A, it's very local, but B, you get these, particularly when you're supply constrained, which we are at this
Yes.
point, you can have these weird things where you see volumes dropping,
Hmm.
but prices still go up for a while. That it's and there can be a dead cat bounce along the way like that. But um, I'm convinced that Jerome Powell has to be taken at his word. He's going to keep this pressure on until something breaks, right? We hope that something that breaks isn't all that bad, but I'm convinced that it's going to be something in a credit mark. Some credit event's going to happen, which is why when I said at the beginning, what am I watching for? Where do you watch the fingerprints of people trying to sneak out the back door? Um,
Yeah.
it's usually it's in some obscure place. So I'm watching. I like to watch. My model is from the outside in. So I watch the weaker elements before the stronger elements. It's interesting to see. I'm looking at a picture of that 10-year note dropping. I'm more interested in what's happening with the triple C junk debt. I'm more interested in peripheral countries. You watch this stuff and it starts to sort of, we're getting smoke signals all over the place right now. It's not super bad, but it's still August, right? So I think
Yes.
that something's coming this fall, which is traditional time for us to freak out.
It
That's when the
is.
squirrels get all busy about burying nuts. People get a little protective, going into the winter, you know.
And that's historically the danger zone. I mean, September tends to be August, September tend to be flat to down months, and we should see the shift. I mean, we've got the lag effect that's going to be taking place. I think a lot of individuals are underestimating, just how fast interest rates have risen, and it takes a while. Most senior loans or most commercial loans at a bank are reset once a year. So
Mm-hmm.
yeah, 6 months ago they were resetting higher than what they were, but you get into this fall, that's resetting at a much higher level. And with the inflationary pressures there, with China's lack of demand for U.S. Treasuries, it's when that yield curve uninverts and starts steepening again that typically the markets get into a lot of trouble. So, with those pressures, if we break that support level, have we been holding this basketball under the water? What if that 10-year jumps up to 7% relatively quickly? That changes the dynamic in a hurry. And, corporate America has been prepared. When you look at interest payments, they've been prepared for higher rates. But how much longer is that going to last? A lot of them may not ever have to refinance their debt and they've got a lot of cash on hand. But when they do have to go refinance that debt, or they do have to borrow some money, or if they do have to raise capital by not going to the debt markets and reselling some of those shares they bought back, supply and demand with less money coming in should lead to volatility in the markets.
Yeah.
And for
I mean, good thing those corporations are pretty well positioned. I was reading Girl on Twitter this morning. She noted that Exxon's balance sheet, right? They have $37 billion in debt, but they got that like a few years ago. It's cheap. They have
yeah,
30 billion in cash. Hey, they just plow that into the treasury market. They're actually earning more on their 30 billion than they have to pay on the 37, right? Because of how interest rates have gone. So there's a lot of that going on out there right now. But similarly to the housing thing, Exxon's going to be pretty loath to cough up their cheap debt and take on more expensive debt. So there's going to be that freezing effect, which is a lag, right? It takes time for that to sort of like ripple through a bunch of different industries, right? Gonna
that's
hang
right.
on. No way. I'm not rolling this debt over, you know, not a chance.
And
So
what's and if rates start moving too far and the government has to refinance all that debt at higher rates, what's the best event that would open the supply spigot so that they can, or demand spigot would be market volatility. And then you've got the retail investor that goes back into, replace China, for example, and their
mhm.
demand for US Treasury. So it's a very interesting time. We've got a lot of historical trends that are starting to shift and break, and maybe it's just a birth pain. Maybe this is a birth pain and we don't have the event that's delivered now, but these birth pains keep getting closer and closer and closer together, and the government intervention seems to be less impactful, less impactful, less impactful, and at some point something's going to break.
Yep,
And
I agree.
back to that, are we 1998 where you had the long-term capital management fell in March, and the stimulus and lower rates into the year 2000 kicked that can down the road 2 more years? Or is this 2008 where Bear Stearns failed in March and the stimulus kicked the can down the road. And I remember the summer, that summer I had a lot of responsibility in managing assets and talking with clients and said, I don't care what they're saying, under the surface things still don't look good. That doesn't mean they can't go another year or two, but I mean, right now, under the surface, things don't look great. They're not as bad as what we expected, but they do, they're still deteriorating, albeit slowly.
Well, I remember, and this is why you need somebody who's been there, done that when you're talking about, how do you navigate a territory like this? Because you remember 2008-9, that was really unsettling. I had just released the last chapter of the crash course in October 2nd of 2008, just weeks before everything fell apart, and I was talking about bubbles and all that stuff. As prepared as I was, as knowledgeable as I was, when I woke up one morning and found out that Lehman Brothers was frozen, right? I was like, I didn't even know what happened. And everything I was tracking, Paul, just went nuts, right? We saw insurance companies, all these interest rate sensitive companies, anybody who's exposed on the derivative side, just tanking, right? So this is my law, my iron law that comes from that, is that I believe that the bankers, the central bankers, Wall Street, and the mainstream media, CNBC, they are a well-oiled machine that's designed to keep the whole narrative chugging along. But when things get a little dodgy, I can also trust that these same people are self-interested and they will do whatever it takes to make sure that they don't lose money.
Well,
and that's, the cockroaches scatter at that point in time. They all go home and they take their balls, as it were, and go home. And that's what happened. That'll happen again, I think.
I think it will too. And we've got evidence of that. What was it? I can't remember the exact details right now, but it brought it to mind was when the Federal Reserve members were front running their announcements, and getting investing into the market. I mean, that we're in the midst of a crisis and they're pure dealing, and they're gaming for themselves when they've already got more information than the average person does, but that greed took over. So I agree with you. They're going to be self-serving in the midst of it. And unfortunately, and what's important, these conversations are so important. And this is when I talk to clients, we got to have these conversations so that you're prepared mentally and you're processing through this before we have to make decisions, so that you're at least 1 to 2 steps ahead potentially, or 1 to 2 steps early before the average individual. And again, like I'd mentioned before, coming into this danger zone, I think, what can an individual do to make sure they're prepared? Well, if you've got some good profits in the rally this year, and you've got some good profits for the past couple of years, build up your emergency fund. Hey, go from 6 to 12 months of an emergency fund to 24, right? And worst case scenario, if nothing happens, at least you're not earning 0% right now, and you might miss a little bit of opportunity. But if something does happen, one, you're in a position that you can still hold on to the assets that you have. You're not forced to sell something that you got caught up without selling, or at lower prices when everybody's throwing out the baby with the bathwater. And you've got opportunity money to take advantage of the opportunity that chaos will bring, because the market, what we're seeing is extremes. If this is a bear market rally, it is the strongest bear market rally that we've ever seen throughout history. And only time will tell. Nobody really knows. But we're seeing this wobbling around the edges, and it's kind of like a car driving down the road, runs off the right side and overcorrects. Well, there's obviously nobody coming. So you overcorrect this way, you go off the other side, and it just continues to wobble until it comes apart. So, just because, we sold off and we had this big bounce, we still don't know yet if this is an overcorrection in the market and sentiment. I mean, the Fed's trained us that they're going to bail us out. And the biggest conversation I have with those who are really fully believing this is a bear market's argument is, hey, the Fed's going to slam rates to zero. They're not going to let the markets come apart. It's just not going to happen. They've proven to us. So what if they can't? Yeah, they might try. But what if they can't? And I believe Powell that he's going to stay higher for longer. I mean, he's already proven that he is, and it's possible that inflation could be a little bit more sticky. So be prepared and be ready and choose your exit points before you're forced out or forced to stay in and not know where the bottom is.
Yeah, you got to have a plan. It's got to be pretty well diversified. Hey, can I switch? We're going to have to pick up that carry trade in some future zone, because I'm looking at the time and I really want to get to something here.
Okay.
Which if we could just, because it has an impact here. Let me see. Let me share this, because I got this. Yeah, I've gotten this question a bunch in the past, and I've talked about it before, but I just got this question again yesterday from Alan in Vietnam. And he had a nice long comment, and part of that comment was about a debt jubilee. And so his comment was America is also getting ready to blow the horns on a debt jubilee. I don't see any other way out of their financial disaster. This will end up like modern day collapse of Sri Lanka with no fuel, no food, nothing available, no spare parts, no complexity, just, perhaps dust bowls and bread lines. So questions for Chris Marsden. What happens in a debt jubilee? So he wants to have a discussion about what is a debt jubilee? What are the implications? What would that look like? Paul, I think that this is really important because I've had people ask the question, and the sub question is, hey, should I just leave her up? Because, maybe it'll just all get, wiped off, which would be pretty attractive, right? Go into a bunch of debt and get some assets and have those all have the liability wiped away off of your personal balance sheet. That would be pretty awesome, right?
Yes, it would be. It sounds really too easy.
Well, I'm not sure it's a great strategy that you would really want to throw all your eggs into that basket, but it's the idea. So first, can we just define a debt jubilee? Michael Hudson did a great job doing this. So if you can read this, of course, but anybody who's just listening, because a lot of people just listen to these while they do housework or other fun things. Michael was responding to a question, and he gave, I think, great context here. He said, quote, well, the Jubilee year of Leviticus 25 was based on Babylonian practice for over 2,000 years. And apparently, when the Jews were returned after the Babylon captivity, they brought back the practice of debt cancellation called Andararam. And when any new ruler would take the throne, the first thing they would do would be to free the personal debts. And they wrote this Babylonian law into the center of the Mosaic law when they edited the Bible. You would forgive the personal debts that had mounted up basically among the smallholders on the land. You would liberate the bond servants, people who had been obliged to work off their debts and labor, and you would return any land that was forfeited. And these three parts of the Jubilee year were exactly what was done and what continued to be done throughout almost all of the Near Eastern kingdoms, Mesopotamia, their neighbors, Near Eastern kingdoms, Persia, even Herodotus. So it's an old thing, right? The idea is wiping the debts off. But the thing I want to talk about here is that because that was enshrined, human behaviors follow incentives. So what I read is it wasn't 50 years, it was 7 periods of 7, which is 7 times 7, which is 49.
49
right?
years.
Yep. And so call it 50, we're rounding up. But what would happen is that by the time you got close to that 7th period of 7, people would stop making loans because they kind of knew that these things, everything it wound itself down. And the idea that we're going to be coming into the ascendant exponential phase of our debt accumulation and just jubilee that's not how it works.
No, if I was a borrower and you're 45, I'd be begging, please loan me everything you can. Please loan me everything.
Everything. Yeah, it had a way of moderating itself so that when the Jubilee clock ran out and it was declared, often what I've been reading is there wouldn't be a whole lot of debts on the books, right?
Yes.
At that point.
Yes. And that reminds me, that counterbalance, I mean, it's good for both parties, right? On the other side of that debt jubilee, you can lever up money. They're more willing to lend, but you're not on the other side of it. The borrower is servant to the lender. You're keeping everybody one class without just absolutely monopolizing everything, kind of like we do today. So the debt jubilee, I think, is absolutely fascinating. I've looked at that and said, if we just applied that wisdom that was learned the hard way over time, but the question is how do you do it in today's society now? Because that upends the power centers. I mean, as I think about that, my goodness, how much of the innovation in the United States and the populace would be free to go out and implement those ideas and be entrepreneurial and gain access to lending and so it would be wonderful. It would be absolutely wonderful if we could do it, but there's a lot of vested interest to keep that from happening, I would think.
Well, I want to talk about that in a second, but the larger point here, which doesn't escape me, is this whole idea that 7 periods of 7. Right? Let's talk about that for a second, because when we're talking a debt-based money system, it has compounding built into it because money is loaned at a rate of interest, and so Whenever you have anything growing by some percentage, which is what interest is over a period of time, you have an exponential system. So if I took this sheet of paper right here, right? Just take a sheet of paper and I start folding it, the old saw, the common question is, how many times do I have to fold it before I can reach the sun? Right? The answer is
Right.
about 50, right? When I did my stadium example in the crash course with the drop of water filling a whole stadium up, when did it completely fill it up? By 1250, if we started at 12, it was 50 periods, right? So there's something magic that happens in compounding systems, particularly in that last chunk, that last 7-year chunk, right? That's when things, if you don't have a corrective mechanism, and so, the ancient wisdom in the Old Testament, New Testament, all that is like, you kind of have to create a system to have this thing undo itself, or it just goes, it becomes larger than the known universe, right? At some
Yes.
point. That's how
Yes.
compounding is. So we're running a compounding system, but with none of that ancient wisdom. We're just like, no, we're going to run this forever. It'll work.
Right. Yeah. And that base, the base from the pyramid becomes upside down and becomes more unstable. And that's why we need recessions to clear out the businesses that should fail and not prop them up. And yeah, it's going to change control of the leadership within those, but we need that potentially bankrupt tender to be wrung out of the system before it builds up to the point that we have an uncontrollable wildfire.
Right. And I would actually flip our tax code entirely so that unearned income was taxed higher than earned income. I would not be hitting labor harder, much harder than I would the people like the hedge fund guys who use money to make money and they have their carried interest, as it's called, and they get taxed at half the rate of labor. It's just not right. It's exactly upside down. You want your most productive people who actually add value to not be paying twice as much as the people who just sit around and watch their stuff compound endlessly and effortlessly. Right.
That's right. That's right. That sure is. That's interesting. So
so one last piece just to so I can complete this conversation for folks who are wondering why not a debt jubilee. It's because of, is this showing up? Do you see this? Did I not get that right? I think I messed up. Oh no, share. Come on, baby, give it to me. There we go.
there we go. That's it.
Yeah. So in a debt jubilee, so somebody's asset is somebody else's liability when in a debt-based system. So if I have a debt, right, and you hold the debt, Paul, you're the holder of it, right? Your asset, my liability. So if we set a debt jubilee, a lot of people just focus on one side of this, who's like, oh, cool, we wipe out the liabilities. Sounds awesome. That's where the benefits accrue. That's that green spot there. So the liabilities get written off, but then whoever's holding the other side of that, they take a loss on that. So when we say a debt jubilee, we got to be okay. Let's say it's my auto loan. Well, who holds the other side of that? Let's imagine it's held in-house by GMAC or something, right? If we just say, great, Chris, you don't have to pay that auto loan back. Jubilee, well, GMAC's balance sheet just got shredded, right? Same thing for my mortgage. Somebody owns the other side of that. And so when you detangle this, it's true that a lot of exceptionally wealthy people like Gates, et cetera, have a lot of those so-called assets up there. But the rest of them, they're in Yale's endowment. They're in the Illinois pension fund. They are in, I'm sure, many portfolios that you're managing at this point in time. The question then becomes, are we just going to pass a law and say that certain numbers of people have to eat those? You're just sorry, Yale's endowment, you're out of luck.
Right.
Is that what happens? Well, not clear how that would work, for starters. And second of all, I will just remind people that we have one example when our collective debt in the system in aggregate went backwards in 2009-10, and that almost destroyed our financial system. We have a debt-based money system. It does not do reverse elegantly, if at all. So,
it does not. And what I noticed in that chart there too is look at how quickly the debt's accumulating versus the GDP. It's taken more and more debt to keep the GDP going at about the same trajectory. Quite interesting. And to put it in perspective, I got to thinking about this. Let's say if you're an individual, you had a rental property, you move into retirement, you decide that you want to owner finance that. Rates are pretty high, right? So this is your savings as an individual, and you've got a tenant that their credit's bad, so you decide to owner finance it to them. If you go through a debt jubilee, you just lost an asset. That puts it on a personal level. And
Mm.
if we know that's coming and you can prepare for it like they did in 7 cycles of 7 every 49 years, then you can adjust for that. But if all of a sudden the decision makers just make a decision that that's going to be done, then that's devastating for potentially individuals, anybody who's saved and lended, and that would upend our system as we know it. That would technically be a reset button, I guess. So
Well, now we're talking the Great Reset. They're not wrong. We do need one. The right answer would have been back in the day. Let me see if I can get this laser pointer out. Right around here. This would have been the
yeah,
right time to do. This is around the 7 periods of 7 back here. Would have been about 50 years from the inception of. I date this to August 15th, 1971. That's where stuff really started to go off the rails here. So let's say 1970. That's 10, 20, 30, 40, 50. We should have been winding this down so that we got this back down to here somewhere by now,
yes,
right? That would have
yes.
been the correct answer. And of course, we did the wrong thing. No, no,
And now it
no.
introduces a lot more instability and a lot more risk. I mean, we're really in uncharted territory in so many ways.
Mm-hmm. Which is why I have chickens. How about you?
Me too. I do too. My wife's giving me a hard time because I've got a hen that's been brooding. So I've learned that I'll take a marker and squiggle around the eggs, because a little over 20 days later they'll come. So I'm letting her hatch off some eggs. And I'm so excited. I love to see them come along. And my
Oh,
barn
that is
cats
fun.
don't mess with the chicks. It's great. My barn cats don't mess with the chicks. That's the biggest thing I was worried about. So I'm very fortunate in that case.
Oh,
So
that's fun.
we'll see
That's
how they.
fun. Do you
But
feed your barn cats or do you just let them do their job?
I do feed them. I feed them somewhat.
Mm-hmm.
So about once a day, more than anything, just to keep them coming up to us. But they do a pretty good job. I've got a male that I decided not to neuter or spay. Spay, I think, is what they call it. And he's a beast. He'll disappear for 2 weeks at a time and come back, looking like he's been through World War III. But he does a good
Uh-huh.
job keeping the rats and the snakes away.
Uh-huh. Good man. Good man. Yeah. Yeah. Ours got a little fat this year. We're not sure what to do about it. Our big boy.
Have you been feeding them on consistently?
Yeah. He will only dry food, but it's like crack cocaine to this guy. He just can't help himself. No, well, he's 6 years old now. His prior pattern was a little fat in the winter, but he'd get lean. And then, it was like late July, and Evie's like, he's still fat. Didn't work out this year. He's a load. So, but
My
he
wife,
catches rabbits, and
oh
yeah,
yeah,
he does
we got
does
a
a good
lot of.
job.
My wife Holly was giving me a hard time last night. I got home, got to messing with the chickens and the cats and the goats, and I have to guard because when I only feed the cats once a day, I have to guard their food from the chickens. So I'll throw scratch feed out for the chickens, but those chickens. Then she called me on the phone. She said, "Are you guarding the cats from the chickens again?" And that just amazes me because the cat could have one good swipe at the chicken, and chicken probably stay away from it. But they bully those cats. The cats just ignore them, treat them with
Uh-huh.
kindness.
Yeah. Yeah.
So
Well, so I guess to wrap this up, to me, it's there's a lot of smoke out there. Whatever's in China could spill over to the world. I do think that China was the engine that saved our bacon, honestly, through most of the 2010 to 20 zone. They were the engine of growth. They created all this, massive quantities of debt in the world's. The world needs debt, right? The
yes,
whole world banking system, even though they're insular in a country, it still matters what the aggregate levels of debt are because that drives the activity. And so they did that, right? So China did that. They industrialized, they built lots of things. Maybe they built a little too much, real estate, but whatever. They were busy consuming like crazy. If they come off of that consumptive train, I think Australia just takes it in the shorts, right? No more iron ore at scale, no more, cement at scale, no more need for coal at scale, right? A lot of things could really happen quickly if
yes,
China comes off of that 7% unbelievable rate of growth and just even moderates. Um,
yes.
it's quite a big
And
deal.
and that trickles back to our markets as well. I mean, and even that impacts our economy with this substantial amount of reinvestment that's coming back into properties. And I don't necessarily agree with all of it, but the travel that comes here and that's a ripple effect that rolls across the globe.
Yeah. Yeah. So, well, I'm really glad that you're finding people are from our tribe are finding you and having having those conversations, because it's just so important to be able to talk to somebody the way we're talking and say, a little worried about the petrodollar. What should we do? Or, does gold make sense here? And by the way, I'm really excited by and whenever silver gets smashed down for about a month, I get a little greedy. I start buying. I
I've been
love
really,
silver.
I like silver too. I like it from a long, you got to be patient with it, but I really do like it. And gold miners are getting pretty interesting as well right now. So, yeah, I think we may have a good opportunity over the next 6 months or so to really buy some long-term assets that make sense in this environment that can do a wonderful job to protect the purchasing power of individuals and help them thrive and gain some independence through the chaos that'll be brought about from short-term thinking.
Yep. Well, my larger strategy is it's the Kapoom theory. There is some sort of a scare. There's better prices in our future, but it won't last long, because
No.
it used to be bottoms would form over months, and then it was weeks, and sometimes it's hours now or minutes. When they decide that's enough, and they panic and markets go vertically the other direction. Needle bottoms, I call them now. They used to be rounded bottoms. Now they're needle bottoms.
Yeah,
And
2000 to 2003 was such a nice, rounded bottom. You had plenty of time to average in, and 2008 was basically an event. And
yep.
and tops become this longer, frustrating process, and bottoms are, one day intraday events, it seems, so you got to be ready for those. And that's important. That's the thing. That's what I've enjoyed talking about all the individuals that we have spoken to from your tribe is, look at their situation, make sure they're on track, let them know where they are, what adaptations they need to make right now to be prudent and comfortable and confident. So the confidence we've been able to give the individuals we talked to has been enjoyable. I enjoy that. And then we get to do scenario planning. Okay, what if this happens? What do you do? How do you prepare? How do you start making decisions now? And they're just great conversations. People that have the courage to look at the world through honest eyes and not afraid to ask questions. And that's the only way that we're going to navigate going forward. So everyone that I've met is what I would consider, hard times bring about good men, good individuals bring about good times. Hard times bring about good individuals. They're individuals that can bring better times. And you want them to be in a position to where they're financially independent and can grasp those reins of power when we come out the other side, because that's who we need leading this country.
Indeed. And that is a movement that's actually started. I'm very encouraged by the signs I see that there is a rallying effect happening. Most recently around Oliver Anthony, he wrote the Rich Men North of Richmond song that busted out. I don't know if you've seen that yet, right? The guy with the red beard who's just singing his heart out, And but you'll enjoy knowing that if you go to Wikipedia, they've already got a page up about him, and say that his song revolves around known right-wing theories such as inflation.
No, I didn't realize that. Oh my goodness.
Which makes me feel extra good when Wikipedia begs for money. I just delete as fast as possible, because I'm like, I don't pay for propaganda, honey.
No,
nope,
not at
that's
all.
free. You're not getting $1 from me ever.
That's our
and right wing. They're trying to recast inflation. Paul, is a right wing theory.
My goodness. I guess until the pain's great enough that it continues to open eyes across the country, they might be able to get away with it. But the problem is, they believe that on narrative themselves. And at some point they're going to be chunked out on the streets from their positions of power, and better people will be in there, and their family names will be destroyed in the history books. I have no doubt about that.
Their names will be mud, as it
were. Yes.
Yeah. Mud,
so
M-U-D-D. The doctor, that was the unfortunate doctor that treated John Wilkes Booth after he, broke his leg leaping out of the in the theater, right, in the Ford Theater. And so this doctor treated him, and the doctor's name was M-U-D-D, and now your name is Mud, right?
Right. I actually never knew that. So
yeah, well, I just learned because a good friend of ours, a follower, a longtime follower, invited Evie and her daughter Aurelia and I up, and we went up to Saratoga Springs. Never been to a horse race in my life. Whole subculture, it's amazing. It was interesting. But right there he was pointing out, and there's this picture of Man o' War, which was like the most, this was the most dominant horse of the day way back when, black and white photos. And it turns out that Man o' War was beaten once at Saratoga Springs by a horse whose name was Upset.
Oh no.
And that's where upset comes from.
I never knew that. It makes
if your
sense
team
though.
if your team has been upset, it means you had a higher ranked team and somehow they got dethroned by somebody lesser,
They
on the
got
rankings.
upset. That makes sense. That really does. So did Evie wear the big hat? The big
Sure did. I
hat?
got
Oh,
yep,
that's
got the
wonderful.
pictures to prove it. It was a lot of fun. We got to stand in the winner's circle. This guy had been there long enough and knew everybody that Joe Garofalo is amazing. He walked us right. We went right into the winner's circle and just stood around with people, and watched horses thunder by and went up into anywhere we wanted to go. We got into, so it was a lot of fun.
What a great experience. That was,
Beautiful. Yeah,
and the
it was a lot
power
of
of
fun.
those horses, the power, the speed, just the athletic ability is amazing.
They're beautiful animals. In the prime of their life, those 2, 3-year-olds, and they're just such gorgeous animals. And they
Yes,
really seemed to, they knew what they were doing and they liked it. They were all amped up, ready for some fun. So that was good. Um, and really enjoyed that. So hey, Joe, thanks very much. Hey, with that, Paul, thanks a lot. Good to talk to you again.
it's a pleasure, Chris. Good to see you today.
And remember, we got to talk about that carry trade next time because that's an important thing.
Yes,
So just
yes.
just bookmark that. We'll get that. All right. So well, thanks everybody. We will see you next time. Hope you enjoyed this. And of course, if you want to talk to Paul and or his team, just go to peakfinancialinvesting.com. Very simple. And everything is there. Contact form, disclosure statements, everything you need to get started if you want to. With that, see you next time. Bye.
Thanks, Chris.